you all know, we have a session on decoding the budget, and for that, we have Mr. Kartik Jhaveri who has joined us. Thank you for accepting our invite to do this wonderful session. So, a little
My
about
pleasure.
Kartik. He's the director of Transcend Consulting Private Limited. I did ask for his profile, but I couldn't get it. So, all his LinkedIn says that he's a speaker and coach, helping people make friends with money and start their journey to financial freedom. He also manages wealth for families and clients across the world. He's also done for people who have been with us 1 year or more. Last Feb, he did a master classes on recruiting, grooming, and delegating team members. That was Feb, and 1 year later, he's joined us again for an upskill. That's very great of you. Thank you so much for joining in. So,
My
without
pleasure.
wasting much time, I'll hand it over to you. We are looking forward to decoding the budget and understanding the nitty-gritties of it.
Okay, thank you, Priya. And it seems like a annual thing that I have a February date with upskill. So last Feb I came, I
Right.
didn't know that, and now we are into this Feb. Okay, so guys, good morning. I hope you all are okay with the budget. Priya was asking me to run a little bit of a poll. So I don't know if the poll results are visible. I don't know if you put it up. I mean, how many of you actually think this is a good budget, bad budget, very good budget? Can we just have the question up so we know what is the general sense of everyone in the room? I mean, in the webcast.
So, yeah, I've just launched the poll right now.
Okay. Is there a way I can see the poll results, Priya?
Yeah, I'll just launch the poll right now. Wait.
All right. Okay.
So, sharing the results. So 14% says not happy, 62% are neutral, and 23% are happy. 1% are very happy about the budget.
Okay. All right. Okay. So this makes my job a little bit easier in terms of if I had to do this thing 2 days back, things would have been very different because you know I'll tell you why, and I just want to show you something on my screen which will tell you why things have been very different. Can everybody see what I'm showing? Okay, can you see this little graph that I'm showing up?
Yeah, yeah, we can see the graph.
You can see the graph, right? And can you see what happened here? I'm just sort of can you see in this zone? This huge red dip candle was happening. Is something that happened on the 1st of Feb, and these two greens are the ones that happened in the last 2 days. And today also we are in some sort of a recovery mode. So which means all the naysayers suddenly have turned around, and all the people who thought that the budget was bad, I don't know. Maybe now everybody feels that it is actually not so bad, and everything's okay, and everything's hunky dory. So that's where everyone seems to be at. So anyway, what I want to do is I don't have a PPT to show you, but I'm going to take you all through this little bit of a short note that I've prepared. And you see, the most controversial topic, and that most controversial topic being the tax exemptions. I'm thinking that we'll talk about that the last. Okay. So what we'll do is let's talk about a lot of things that have actually happened in the budget, and I could see a lot of opportunity, a lot of money all across the places. But a lot of people did not catch it. So on the budget day, it was almost a little bit of a surprise when I started rating the budget as a 8 and 9, and most of the other people in the panel on various media channels and various newspapers were all rating it 4 and 5. So now I'll tell you what my objective and what my perspective was. Now, the first things first, whenever we are looking at a budget, please understand that this budget is not to be looked at from a privilege point of view. And what I mean, I'll explain. Uh, we have in India about 6 crore taxpayers. That's based on the data available from the income tax website, right? Now, out of that 6 crore payers, almost about 96% people are below the income bracket of 25 lakhs. So, which means the people who are actually in this zone, and the ones who are actually not happy or neutral or don't know what to do or are expecting tax breaks and things like that, are a part of a small 60 to 80 lakh people in this country, versus that look at the whole populace, the whole income tax return filing population, and the rest of the country, because the budget is not made for essentially you and me or even our clients. It's basically made for everybody else in the whole of the country. So when you take that perspective and then you put yourself into that shoe, then you have a very different visualization, and you have a different overview of what you make of an event like a budget. So I want to share a few things with you very quickly, and I'll spend a bulk of my time on that tax matters, like I mentioned. But look at this thing. I thought there were a lot of great announcements that came up. Farmers' income double. If farmers' income actually doubles in the next couple of years, we've been talking about this for a while, and there is also an impact happening. Some of the farmers are most wealthy in the northern parts of the country, and there's also so much of talk in terms of including these farmers into the tax net, because that's the way the tax revenue will go up and our tax burden will go down a little bit. But on the other side, you have farmers in Vidarbha and the lower parts of the country where they are actually hand to mouth and they're living a very measly existence. Then things like an agency for recruitment. We are focusing on renewable power. I don't know how important this is in your mind and how much of credence do you give to this point, but this is huge. If you saw what happened last year, we had the hottest summer, we had the craziest monsoon. The monsoons was postponed, as a result of which all the crops and everything was getting spoiled. We had rainfall in January, which was completely unheard of. Now we have a cold wave, and with my association with a lot of climate scientists, I understand that things are only going to get worse climatically. And what that obviously means is that we need things like renewable power. We need manufacturing, more manufacturing to happen in India. We need a lot of activities to happen around this climate resilience zone. If you see, there's a little 4,000 budget, 4,000 crore budget also allocated towards this. Now, companies that are involved in this area are the ones which are going to make a lot of profit to you if you think about investments and from that point of view. See what they're doing socially. 20,000 hospitals are getting empaneled, just like the private health insurance. It's not small. This one is massive, 103 lakh crore on infrastructure projects, and they're serious about it. So they not only mentioned it in their manifesto, but having said that, they've also started laying down the groundwork for it by saying that they're going to expand the national gas grid. Sorry, if the gas word is not there, but the gas grid to 27,000 kilometers. The corporatization of ports, then 100 new airports by under that Udan scheme by 24. They are also focusing on tourism, 5 archaeological sites to be developed and a clearance cell for entrepreneurs. So in this sense, if you see socially, this budget was packed with a lot of action. It may not mean direct money on the table for you and me, but this is a definite pathway to a lot of money and a lot of opportunity which is going to come our way. Um, I want to also talk the next about tax administration. Look at this: 40 countries, have something called a tax charter, and it's a part of their statute. Effectiveness is varied across various nations, from whatever I could do in terms of research. But it's a good idea to have a tax charter. Why not know your rights and what you can do and what you cannot do? Then there is basically no interest. There is this Vivad se Vishwas scheme. So no interest in penalty for paying disputed tax by 31st March, and approximately lakhs and lakhs of cases that are going on in the income tax department. Think about that. If that starts going down, how much money will get freed up? Uh, this is a very interesting thing. We work with a couple of American clients, and we see that a lot of times their returns come pre-filled. So we are also moving somewhere in the same lines. DIY mechanisms kicking in, hassle-free tax filing happening. We are talking about pre-filled tax returns. So that's something that we should start looking forward to. I mean, all our clients will also look forward to that happening. And this will be definitely better than the thing that most people do, which is to pay that 300 rupees and 400 rupees and get some man to come on the table and file the tax returns. So this is going to be a far more huge benefit to all our clients if they actually start having these pre-filled returns, make our life also easier if we are advising them on this. Uh, Faceless appeals, very similar to faceless assessments. That's another positive step. Tax audit limit raised to 5 crores. Now think about the burden. I don't know how many of you have the experience of a tax audit. When the chartered accountant has to go through a tax audit, and when the company accountants in the finance department has to go through this, it's a huge amount of time consumption. But look at this, it's a big positive. 5 crores for a business having cash transaction of less than 5%. Now, most of the genuine white collar businesses don't really have too much of cash transaction. And if you want to be eligible for the 5 crore tax audit limit, then why? I mean, why not look at the as low as possible usage of cash? 2% for technical services versus the 10% which earlier. Do you know a lot of people in this country actually don't like their tax to get deducted? And the simple reason for that is that the tax deduction, which is typically 10% for professional services, eats up a lot of money. A lot of people actually don't even understand this. So with a 2%, again, there is a little bit of benefit for them. Cooperative societies could get away with a lower taxation. Look at this, no criminal liability for civil acts. Now, there was a punitive part of the income tax law which said that if you did not pay your income tax on time, and it was tending towards criminal, and they've actually clarified that there is no criminal liability anymore as far as regarding payment of taxes, etc., is concerned, because this is considered as a civil act. Then the introduction and the idea of giving you a PAN on the basis of an Aadhaar. So if you have an Aadhaar card, straight away you get a PAN card which comes to you. See, these are huge measures. It doesn't affect you and me, but think about it. We are 130 crore Indians, and the population that we are talking and the population that we are serving is a mere about 60 to 80 lakh people in this whole country. I mean, how much ever small that may sound, but that is the market in which we are operating. That is the people that we are interacting with, and we have a large country. So these kind of changes make a huge deal of difference to a lot of people. Um, Here is the opportunity. I think these some of these opportunities were huge, but a lot of us actually missed it on the first day, and then I don't know if you've still sort of understood this well. Sovereign wealth funds who will now invest in India, an infrastructure company will be exempt of any sort of income, which is dividend income, interest income, capital gains. So can you think about how much money will flow? There will be like a flood of money which will come. So if you are talking about a 100 crore, 100 lakh crore infrastructure investment, see the amount of money which a lot of these foreign funds and sovereign funds. Sovereign funds are basically government-owned funds like I forget the name now. Government of Singapore has a particular company, and that company keeps investing. Can you just find out what the name of the Government of Singapore fund is? I think it's called Temasek Holdings or something like that. But I mean, that's one example. So there are so many of these sovereign funds which will start sort of coming in. Uh, the increase in time for concessional rate of withholding tax. See, these things don't make a difference to your and my life on a day-to-day basis. But when the tax that is deducted for Indian companies borrowing overseas, what happens naturally? Let's think about it. It's automatically extra profit generation. So if I had to borrow money from somewhere internationally and I had to pay interest there, and because the foreign party is not really paying any tax in India because they are not even registered in India, there was a law. Uh, you might think this is a mundane sort of a law, but there was a law which said that you have to deduct their tax as if it was an Indian party. At least the government gets some revenue. Now that has been reduced. Now what that means is obviously if I had to borrow funds, I have to pay lesser amount as tax. That means there is more cash flow in my hand, and I can use that cash flow in whichever way I want to use it. Look at this one. Foreign portfolio limits have been increased to 24% to the sectoral cap and the statutory ceiling, which is again interesting. NRIs can invest. Foreign portfolio investors limit again in government securities and bonds is up by 10% from 20 to 30%. And the entire outstanding stock of a corporate bond, let's say there's a company which had 100 rupees of corporate bonds in the market, the foreign portfolio investor could only do 9%, and from 9 this has gone up to 15%, which means even in the debt market there is enough liquidity, there is enough money which is flowing in. um, NRIs who are willing to invest into ETF, which is having less than 50% equity on a repatriation basis, and they can invest any amount of money under a non-repatriation basis. So these things are small, but when these fine prints are understood well, I can see a huge flood of money basically coming in, to the Indian markets, whether the equity markets or even the bond markets, and which obviously means when there is a lot of money coming in, there's a lot of liquidity that comes in. When there's a huge rush of money, what happens automatically is that prices move up, and obviously that benefits everybody who's already invested into this. And I think one of the best part of the news for money coming in for the government and essentially for the stock market and essentially for all of us and for all our clients was divestment. For so many years, we've been talking about divestment. Now we've got so many companies which are actively being spoken of. We're speaking of BPCL, we're speaking of Concord. IDBI and LIC were two huge announcements, and I think LIC is such a huge announcement. And LIC employees will obviously take it adversely because they don't want to have interference happening in their affairs by public shareholding and things like that. And it's always a protective regime, just the way everybody reacted on the tax regime saying that my exemptions are going to go and I don't want them to go. For some emotional reason, a lot of LIC protests will happen. But think about it, it's always good to sell a good functional asset versus selling an ailing asset, right? What's a better thing to sell? Is it better to sell Air India or is it better to sell a company like LIC? And we are not really selling it, right? The government said they will start unlocking value. So even if they divest 10% of LIC's value, and I'm given to understand LIC's assets are somewhere in the range of 28 to 30 lakh crores, say 30 lakh crores, just for sake of convenience. Think about it this way: even if 10% of that is unlocked, uh, that's 3 lakh crores. If 5% of that is unlocked, it's 1 lakh 50,000 crores. That's a huge amount of money. The direct tax collection in this country is about 5 lakh crores. So just think about it. One divestment from one company, 10% brings in so much of cash for the government. Of course, it's going to make a huge difference, right? In terms of our fiscal deficits, also, it's going to make a huge difference to the government's cash flows. Today, the government has to rely almost about 50 to 60% for its inflows on taxation, which is the tax that you and I pay, income tax, the corporate tax that companies pay, the GST that all of us pay together, then levies and stamp duties and custom duties and things like that. So all these levies and taxes, direct and indirect, all constitute about 50 odd percent of the government's revenue, and the rest obviously comes from debts and borrowing. But think about it, such a huge bulk of cash coming in. What's going to happen? The participation in the equity market, the investment opportunity for so many investors. I think it's an endless story. So I think I was very, very pleased by listening to so many stories. Let's move on. Um, I thought there were a lot of investor-friendly measures. I've just categorized a handful of these here. Uh, Now, despite our best efforts, we as wealth managers and financial planners tell the whole world that don't put so much of money in a fixed deposit, right? Because your deposit insurance is very low, and it's not such a profitable thing to do. It's not tax efficient. It's not wise to have so much of money in a bank fixed deposit. But from the perspective of the 98% Indians who got huge amount of savings in their fixed deposits, and if the stories, the really sad and the really heartbreaking stories that we heard uh, during the last few months with regards to the PMC Bank and what happened to that little fiasco, where a lot of people, money was stuck, they could not withdraw, they could not do anything, and they had huge amount of deposits, amount in current accounts and saving accounts and all of that, everything frozen. So, from a very, very baseline, from a common man perspective, if you're looking at a family of 3 or 4 or 5 people in a house, say 4 people, 5 lakhs each person has, I mean, each person has a deposit insurance of 5 lakhs. That's 20 lakhs wealth of that family secured. Now, this you will resonate with me when I say there are a lot of clients who come to you when they are starting their journey into financial planning, they're starting their journey into wealth creation. A lot of them don't have a lot of assets, right? I mean, we've always seen this that they will be doing a couple of thousands in SIP, a little bit of money in mutual funds, a little bit of money in shares, maybe a handful of policies, maybe some bank deposits. So it's scattered. The pattern is very, very similar. But it is guys like us who actually tell them, look, I mean, 5,000 SIP is not going to get you anywhere. Maybe think about 50,000. Just having for 10 lakhs or 20 lakhs in a fixed deposit is not tax efficient. Think about a bond fund. Suggestions like this. But from their perspective, think about it, that if the insurance goes up from 1 lakh to 5 lakhs, it's a huge benefit for them. And having said that, there is a flip side to this facility also, which is that banks now in turn will have to pay a higher premium. And where's that money going to go from? Obviously from the bank's balance sheet. And what happens as a result of that is that somewhere bank will recover that cost in terms of the money that it lends to consumers, you, me, everybody put together. So 0.1% is the premium that they pay for getting this deposit insurance, and now which has gone up 5 times. Naturally, they're going to recover it from somewhere. But all said and done, such a great idea, right? Uh, Debt ETF for government securities. Now, I don't know how much of an impact this will really have, but the point is that although there are a lot of mutual funds in which we could do government securities, both with a short-term perspective and a long-term perspective, but I think with ETF coming in, the government thinks that there'll be far more deeper participation on a very very retail level at a very very small ticket. And I think it's always nice if there's more money coming in government securities, because eventually all these monies that we put into the government securities goes in for some long-term usage. So I mean, it's a welcome move to have even an ETF which is now going to be promoted by the government, and then they'll push it. There'll be more education, there'll be more information around it. Let's talk about DDT, right? I'm sure all of us agree that it was a very good move, because we had triple taxation that was going on DDT. At the moment the company earns the money, they pay corporation tax on that on their earned profits. After that, whatever was left was a surplus. From the surplus, the dividend got distributed. But to distribute that dividend, again, there was a dividend distribution tax that the company had to pay. And as an investor, as an individual, as a consumer, if you got that money, and if you got more than 10 lakhs in a year, you had to again pay tax. So, I mean, basically three taxes. Fundamentally, in my opinion, I don't even agree with this whole idea of having a dividend distribution tax, because it's unfair to even charge the same amount of money twice. Forget 3 times. But well, anyways, we had a 3 times charge happening on this money, and now we have a 2 time charge, which is to say that the companies will earn their money, pay their corporate tax, and then they will have no more dividend distribution tax, completely abolished, which I think is a fabulous move again for everybody, including mutual funds. Uh, no more dividend distribution tax, and the money that you earn as dividends come to you, get added to your income, and then you pay tax on it based on the slab that you belong to. But now, think about it this way: there's so much of resilience on this, and there was so much of bad blood on this, saying that why do we have to pay dividend, and it's going to change your life, it's going to pay so much of tax. Now, think about it this way: they also said that on a mutual fund, if you had to pay a lot of tax, dividend option schemes will become unpopular, and so to say. My question is, how many of us actually recommended a dividend option in the first place? Dividend options was a thing of the past, and we all know that it was a kind of a marketing gimmick to entice investors with dividends. And we all said, for an equity fund, definitely go to growth. For a debt fund, going to growth makes it more efficient. Then do an SWP. After 3 years, it becomes even better to do an SWP, and things like that. So if some investor is talking about, or if media is talking about dividend option, I think they are very, very ill advised. They don't really know what a lot of us do. So I don't think there's any one of us who will have an issue with mutual funds not having dividend distribution tax. I think it's a great plus. Then the other thing which I addressed on a couple of forums, and that was equity dividends are going to be taxed. And now, come on, who knows this thing better than us? How many portfolios do we see where people walk in with 50 lakhs and 1 crore of equity portfolios? So I'm not talking about the HNI or the ultra HNI segment that a lot of financial planners and wealth managers serve. I'm talking about Indian populace at large. How many people do you think have an equity portfolio of 50 lakhs and 1 crore? So having said that, what is the dividend yield? 1 to 2%. So even if you have a 2% dividend yield, and that dividend yield of 2% happens in a flat market when the markets are in a recessionary mode, when the markets are on fire during rally times, and like the graph that I just showed you a while ago, uh, what's the dividend yield? It's about 1%. So even on a 1 crore portfolio, 1 lakh is the dividend that you're going to get from these companies approximately. Should that worry you so much? Should that make such a big difference from a tax perspective? And if you have a 1 crore portfolio, then you don't mind paying a little bit of tax on 1 lakh. I mean, I would think about it from that point of view. But if somebody had a 10 lakh, 15 lakh file, I mean, typically this is what you see when you start with a new family. How much of an equity portfolio do they have? And how much of the dividend comes out from that equity portfolio, which is going to really be such a huge cause of worry and such a huge cause of contention. So I think it's pretty much a non-issue. I want to spend a couple of minutes on widening of the tax net, which is always the government's endeavor, because I said we earn typically from direct tax, indirect tax. The government earns about 22 lakh crores uh, annually. Now, what is 22 lakh crores is about 10 odd percent of the GDP of this country, which is actually tax to GDP ratio is like really, really dismal. It's really poor because there's such a small base of us who is actually um, giving the tax and paying the tax and funding the revenue side of the government. But well, that's how it is. That's how our country is planned. So, having said that, it's quite logical for the government to go around looking at various methods and avenues from which they can generate a little bit of tax wherever that is possible from. So there's TDS on mutual funds. Now, if dividend distribution tax is gone, and if a fixed deposit, just like a fixed deposit pays you an interest, and interest attracts TDS, the same thing is going to happen to a mutual fund and above rupees 5,000. What's the big deal about it? Uh, NRIs, it seems like NRIs are going to have a very raw deal, and everybody was talking about all the people who are working in tax havens like Middle East and things like that are going to be taxed on all their income. Now, that would be draconian, it would be atrocious, and it would be in very bad blood if something like that happened. I think it was very clear. And if a lot of us are working, I do, or even I have a few clients people who are working on ships. See, these guys who are working on ships, think about this. They were stateless, right? Because they are living on the sea, they're sailing, and they're out of India for more than 182 days. So, which means that makes them a tax non-resident in India, and all the money that they are earning, they are actually earning in US dollars or in whichever currency, and all that is going tax free. And if somebody was going to sail for a little lesser, they would actually take a holiday to another country, make sure that they are out of the country for more than 182 days, and ensure that they remain in a tax free status. So think about it, and they're paid pretty well, right? I mean, even a person with a reasonably lower rank, to put it very simply, uh, from my experience, my understanding, also gets paid about $3,000-4,000 a month. And you see that salaries are large, they're huge, and a captain would get paid easily about 10, 15, $20,000 US dollars a month. Okay, and the reason for that is because of the hardship and the problems that they go through. They're away from the family and all of that. So what the law is simply trying to say is that prima facie, if you are an Indian tax resident, okay, which is, let's say, all of us, whatever income accrues to us while we are in India, all of us are obviously in India. Okay, it's easier to understand from our perspective so that we can understand the non-resident perspective. So today, let us say you and me, we are in India, we are earning in India, the income is set to accrue in India. So therefore, obviously, there is tax on that, right? There's no question about it. Now, if I actually did some consulting work, or if I did some work for, say, a Japanese company or for a European company, I would send a bill to them for my services, and they would pay me maybe $5,000, $10,000 as my fee. So that is also income that I have accrued in India. Let us say one more step. I have gone out of the country, and let's say if I've gone for some consulting assignment again to Japan or Australia or somewhere, and I charge about $5,000 for my services there, then I have earned that income whilst being out of India, but I'm still tax resident of India. So therefore, that income is still accrued in India. Okay, because I hold an Indian passport, I'm an Indian citizen. Now, apply that to non-residents. Non-residents, especially shipfarers, it's easy to understand with their example. They are traveling around the world, so they are not in any jurisdiction. They might be working under a Filipino company or a Singaporean company. They're getting a salary from there. Okay, they're sailing around the world. Their tax residency is India. Their passport is Indian. They are having an Indian PAN card. They are filing their returns in India, but all that income is going completely untaxed, or there is basically complete evasion, almost sort of evasion on tax. It was part of the law. So the law is only becoming tighter on this, saying that, look, you know what, we're going to tax you. So whatever you're earning across the world, we're going to tax you. But if you are working, and the clarification has also been released on this, if you're actually working, doing a salaried job in, say, Dubai, for example, then the income that you're earning in that country, you are genuinely out of the country, you are genuinely working for a bona fide company in, say, Dubai, in United Arab Emirates, and then you are earning a salary from there. Why would that get taxed in India? Because then your tax residency is not India, it's that country. Okay, and then we have double tax arrangements also. So I think there's a lot of confusion on this. let's put it to rest. It's only for the abusers, and it's only for the people who are actually going around the law, who are evading tax and things like that. So it's really happening for them and not for anyone else. Then, I mean, these are a little bit of irritants that have come in. TCS, that is tax collected at source for LRS remittances, through tour operators. Now, a lot of times, say you're traveling to Singapore and you want to not buy tickets for attractions like the Universal Studios in Singapore, or you don't want to pay for the Marine World. You don't want to pay those tickets there in Singapore dollars. You don't want to carry it. You don't want to spend that money. So what happens is you give it to your local agent. But what does your local agent do? Your local agent actually has a connection with what is known as a destination manager, a local guy who's like his partner or of some sort, or an associate, and he's buying those tours from that partner. So he's obviously making payments to them. And again, the same logic applies, that that person is not Indian, so you're paying somebody some money, and the government is not going to get any tax out of that expenditure. So therefore, a 5% tax collection on source, tax collected at source. So now, but maybe a smarter idea could be, you could buy your attraction tickets when you are abroad. These days the phones work everywhere. Wi-Fi is there everywhere. Just land on the first day, buy your tickets, or buy them online. There are lots of ways. I don't think this is going to be such an impediment. Um, the other one was authorized dealers, basically the money changers who we get our foreign exchange from. So if you're going to do remittances over 7 lakh, then they have to also collect a little bit of tax from us at source. Now, moving on to e-commerce operators like Amazon. If you want to sell your goods on Amazon, basically Amazon needs to deduct 1% TDS if they are going to pay you, if you're going to sell more than 5 lakhs. See, isn't this really innovative? This is really clever, right? Because if you're selling something on Amazon, and who knows if that person is actually, and these days we all buy from Amazon, for example, and then sometimes you're getting goods that are shipped from Haryana, sometimes they're getting shipped from Uttar Pradesh, sometimes from West Bengal. We don't even know which shop is selling to us. We just see it's like an aggregated marketplace. We're buying what we want to buy, and who knows if that person is actually complying with the laws and paying taxes or not. See, it's good with if more people come into the tax net, because A, there is compliance, and B, what happens is, the shared burden goes lower. It's not going to change in a day, but obviously it's a smart thing if more people come in. And I think who's going to argue on the fact that a lot of people either under-report tax or don't report tax, or just simply don't comply with tax, right? We all know. And that's been ingrained into the Indian system of existence for so many years. So that's there, and this is like a routine thing: increase in basic custom duty and excise. But I think there's a little bit of a difference this year. What they have tried to charge, and I was going through all these products under, which have got their custom duties raised. Most of these products are products that could be made in India. A lot of them. And the government is trying to say, well, why don't we just make it in India? Why don't we focus in making India? Because that way, our reliance on these products go down. Now, quality is an issue. It's a concern. We can argue both ways about it, but the government is okay on its agenda. And I think there is a little bit of merit in promoting something which says "Make in India," because it promotes entrepreneurship. It promotes a culture of why not be proud of what is made in your own country, like the way it was about engineering once upon a time in the United Kingdom. So if an engine was made in United Kingdom, or if a hardware tool was made in the United Kingdom, if something was made during the Industrial Revolution, and if it came from UK, it was supposed to be like the best quality in the world. The same applies for Japan. So if the government's agenda is to promote a program like Make in India, I don't think I would even for a moment sort of oppose such a program. So I think that's a great idea. And then if we still have to buy things which are imported and which we don't want to buy locally, maybe we pay a little bit of a higher price for that. And I think that's cool, right? That shouldn't be a problem. Okay, so I'm told we are about 10 minutes away from uh, the what we need to talk. 10:45 is what I've been told, and 15 minutes Q&A. So we're going to have a little discussion also. But now let's talk about the new tax regime. Okay. Um, so I've included all the slabs, even the 0 slab, and therefore 7 slabs. In my view, this was extremely progressive and forward-looking, and it's an indication of times ahead. See, I think the writing is on the wall. Even from the body language of the finance minister, when she announced this new provision, If you recall and if you've seen the speech, did you see what she did? What she said was she was going through the Income Tax Act, and it was such a big document with so many deductions and exemptions, and she wanted to make it thinner and make the law simpler. To that extent, great. But I think we've all, sort of, like a large majority of everyone, just went by blinders. They just refuse to see the light. They just refuse to actually see it in the right perspective. And all the comparisons with all the old tax, new tax, who's going to get what, and how the new tax is going to make you pay more, so on and so forth. So I think all that argument, a fundamental point here was missed. Okay. And the point that was missed was everyone very nicely and comfortably assumed that these exemptions were my sense of ownership, and now they are going to go. So you can't compare, obviously, you can't compare an apple and an orange. You can't make one tax structure with exemption and then say in the new structure, I'm going to pay more tax. That's not the way to compare. Think about it this way. A lot of your clients also who come to you, even the wealthier ones, okay, can you sort of guarantee that each one of them was taking advantage of each exemption and each deduction available in the Income Tax Act, largely speaking? And I mean the popular ones. Standard deduction, of course, everybody takes. Section 80C, again, everybody takes. No problem on that. Other than that, everything else is, please note, voluntary. Health insurance is a necessity that you and I know, but 90% of Indians don't know that. A lot of people look in your own office, don't even have a health insurance. Okay? So think about it this way. It's a voluntary thing. Housing loan, because you didn't have the money, therefore you took a housing loan. Voluntary. Okay? Paying for your for your education, voluntary. Most of the exemptions were voluntary. They There was a system, there was a culture of promotion that please do these things and we'll give you a tax incentive for doing it. And that's why it happened. So now, how can you possibly make a comparison saying that last year I had all these tax exemptions, and if I'm in a 10 lakh or a 15 lakh or a 20 or a 25 lakh bracket, then this year I'm going to pay so much more tax if I were to shift to the new system? I think that argument itself is ill founded. You can't argue that way. How you must argue this case and look at it in the real perspective is, if you are today starting to earn, for example, you are in a situation where, don't talk about exemptions. If you earn 5 lakh rupees or a 10 lakh rupees, as is where is basis, without even any consideration of any exemptions, where are you paying more tax and where are you paying lesser tax? Come on, the government has done some numbers, right? And today morning's report says that approximately 10%. Remember, I said that 60 lakh figure, people who are actually paying that higher tax. But out of that entire 6 crore people who are filing tax returns, not more than 10% of them are even availing that HRA benefits or benefits under home loans and things like that. They've got data. So I'm not really a pro government or whatever, but I'm seeing the merit here. I think this is a hugely positive thing. Thank God this is coming, because as a result of this, somebody who needs cash. And we have done this. A lot of you who've also been on television and who've even been following some of the shows on television, you will notice people say, I earn this much, I spend that much, and how should I do my financial planning? And I need this much budget to run my house. Did you notice that a lot of people don't even have money to enjoy the exemptions? These exemptions and deductions, they come at a cost. They are not for free, right? So if you have to take advantage of a 24B for housing loan, for the interest on a housing loan, you have to prima facie pay that EMI. There is a cash flow impact to that. Even a simple thing like an ATC, if you had to take advantage of a tax saving section, it doesn't happen for free. You have to pay something. The only thing that happens for free is your standard deduction, because whether you incur or not, that is a granted deduction, that is a free deduction given to you. But any other deduction, whether it's an ATD, ATE, donations, you have to incur a cash flow. So now think about it. If you have a 10 lakh earning family, if they have to take advantage of all the exemptions, and let's say all the exemptions that they can take care of are standard deduction, ADC, which is 1 lakh 50, that makes it 2 lakhs, another 2 lakhs for housing loan. Let's just, for argument's sake, consider that 50,000 in NPS. Pretty much this is almost what, 5 lakhs, 4.5 to 5 lakhs. Now, can a family actually survive in 5 lakhs? Divide by 12, 40,000 rupees. think about it that way. So a lot of people are not even able to take exemptions. So if somebody is joining the force new, let them choose. If somebody is already in the force but needs more money, there is no pressure now, because tax was always a bad word. I don't want to pay tax. Let me buy a policy so I don't have to pay tax. That is the thinking. That's the mindset. That mindset has been blasted away. Isn't that a good idea? So you don't buy the wrong policies. You don't get missold. You don't buy bad products. You don't make a myopic investment strategy just based on tax, little lollipops. But you actually do it based on the merit of an investment planning. So your and my work has gone up. The CAs are a largely disgruntled community on this, because they are all saying we'll have to decide, which one is good for whom. But who are you talking about? You're talking about people who are 25 lakhs plus. And in any case, most of the people, the large masses of India, are paying 200 rupees and filing tax returns by a runner boy coming on their table. We all know that, right? So uh, where's the problem? And in any case, this tax levies are not meant for people who are above 15 or 20 lakhs of income, because you have to pay the tax anyways because you're earning that much. So my submission to this whole thing is, I don't think it's such a huge worry. It's not such a big problem. Now, it is crystal clear, and let me repeat. Let me say this again. It is crystal clear that if you already have a housing loan, now this is an advice we can give our clients as well. If you already have a housing loan, if you already have some insurance policy going, if you already have a few things that are happening, let's say NPS, if you've already been enjoying these exemptions, then well, you have a soft landing, right? I mean, this is exactly what you have to do. You continue with the regime, you continue taking the tax breaks for a year more, maybe for the next year also, if the same announcement is repeated next year. But other than that, do you really think this is the way forward? I don't think so. What is going to happen is, uh, this is going to be the way forward in terms of merger of sections. It's going to be ease of filing returns. It's going to be easier for you to do. People cannot explore all the exemptions and deductions. Whatever you earn, you choose. People like you and me have a much more of a responsible job to do on where you're going to request and suggest what to do. We have faced a situation a lot of times where a customer doesn't want to buy health insurance more than 25,000, for example, because that's just the deduction available. But what if there's a adverse family health history, and what if we need him to spend or her to spend 40 to 50,000 on buying a much larger cover? Isn't that like a smarter thing to do? So we are now going to move into a regime where investment and financial planning and recommendations will happen on merit versus on tax deductions, and versus frivolous small time decisions just because you get a benefit. That's why you do this, and that's why you take these exemptions. So even this whole argument of uh, you know this entire new tax regime is going to disincentivize long-term savings. Now, I don't know where are these people coming from, because the only thing that I understood that Indians did was they bought a PPF. I mean, largely everyone had a PPF account, even with or without advisors like us. Everyone had a PPF account. Everyone had a few LIC policies, and PPF is still a great idea because it gives you about 8% for, tax free, which works out to, all of us know, about 11-12% pre-tax, right? So it's a great idea. LIC returns, we all know, are quite low, and for that matter, returns from any private insurance company. So, what are we really disincentivizing? Didn't we always advise that it was better for wealth creation to go to SIPs? Didn't we always advise that it was smarter to invest into the equity markets, and that's the way to create money? Didn't we also advise that real estate returns are obviously better than returns that you get from insurance policies? Pension policies, I mean, long term savings. Whoever suggested investing in pension policies? Pension policies, number one, taxable because pension is treated like salary. Firstly, the accumulation of the pension in a traditional policy will anyways be about 4-5%. So, was it even recommended by any one of us? So, why are we talking in terms of disincentivizing long term saving? If media talks about it, I think granted, and we give it to them because they don't really understand. But as financial experts, I don't think that was the way to go. ULIP pension policies, okay, the accumulation there was a little better, but it was still not the best tax efficient tool. What were we doing really for creating a additional income source or a post-retired income source for people? What were we doing? We would put money into a bond fund, do an SWP, put money into a hybrid or an MIP kind of a fund, or a fund which has got typically 20-30% equity or 15-20% equity and the remaining in bonds, and we would try and create a cash flow out of that. Those were the ways that we were anyways doing for providing cash flows for people who had retired and the people who were saving to retirement. Pension policies were never the way. It was always supposed to be SIPs. It was always equity markets, which was fundamentally and always voluntary, right? So then, where's the question of disincentivizing long-term savings? In fact, long-term savings, I think, will get better channelized, and I think all of you will agree on that. Company HR will obviously facilitate. It's not complicated. So what if you have two regimes? Suddenly, if you, there is a habit that people have formed over the years. If you are asked to suddenly change your habit overnight, of course there's going to be resistance. We are all going to resist change to a large extent. So this is like a big impact given to you with a lot of cushioning and with a lot of padding around. Continue the way you want to be. Take your exemptions, enjoy the reductions for a year. Next year we'll look at it. And I think that's how the government is thinking. But wait a minute, you have time to breathe. Eventually, I think the writing's on the wall. We will all move to the new structure. Tax brackets will expand and everyone will move there. Wasn't that also the recommendation of the direct tax code once upon a time? That, tax structures are simplified and everything that you earn is put into one pot and you pay tax on that. So with that, I've done pretty much, the session that I was allotted to, and I think we can open this for question answers now. Priya?
Hi, Kartik. That was, I think, great. Pankaj Gira has put up a question, a different view on tax regime, and appreciate the same. I think that is what sort of emphasizes the entire thing. So we do have some questions. Can I request people to just put in their questions? We are open for questions. And before that, can we have the next poll of how happy are people right now after the? This is the view after the session. So we had 1% saying very happy before we started the session, and now we have 31% saying they are very happy with the budget. I think
Wow, we had an impact.
you've done your job beautifully with this. There's nothing else that
Thank you.
I would want to share. Just one more quick poll from my side. We are waiting for questions if people can put it up. Can I have people rating how the session was? I think decoding the budget is not a simple job, and he's done a fabulous job with it, taking up all the points. It was really indeed a great session. Thank you so much. We had like almost 200 people attending throughout, and which is like a great number. That shows how much
Okay, great.
you have everyone. So we're open for questions. Um, So Jaideep says, great session. Okay, so Mohsen's question is, Mohsen Bijapur is asking, can you please elaborate on the e-commerce taxation bit, please? I'm a little confused with that.
So what's happening on e-commerce is, again, I'll go back to the Amazon example and I'll try and elaborate that a little more. So when we buy products from Amazon, Amazon doesn't manufacture them, right? Amazon is basically a logistics company. It's a warehouse kind of a company. So it is a marketplace. Lots of various vendors, service providers come together on Amazon and they're selling their goods and services. So when we are buying, let's say when we buy a notepad like this, right? What we do is we're buying it from certain vendor. Now this vendor could be, let's say, located in Tamil Nadu. We don't know where the vendor is. And he is basically putting it together. Amazon is helping him supply the goods to us. So we have made a payment, say 100 rupees of a payment for buying this notepad from Amazon. So we've obviously paid Amazon. Now, in turn, Amazon has to pay the supplier of the goods and services. Now, when they will pay, let's say Amazon will retain 5%, just assume that's their margin as an example. They have to pay 95 rupees to the manufacturer of that product. So when they pay that 95 rupees, they have to deduct a certain amount of tax, the tax at source, TDS. And that's what the e-commerce provision is talking about. So it's kind of nice because what happens is the moment somebody pays tax, and I think widening of tax net, no, it's going to be here. So the moment you deduct tax for somebody, what happens is you have to file a tax return also. So you have to tell the government that I have deducted 1% tax from a payment made of rupees 100 or 90 or 80 or whatever it is from Mr. X or from this company XYZ. Now, the moment I do that, it comes on my AS26 and it also goes on the AS26 record of that party, that person, that company, which means that person is now under pressure to report his entire income. So earlier we don't even know if that person was reporting or not reporting. But now if it is showing in your AS26 that some party has deducted tax for a payment made to you, then you have to obviously file a return which is going to match that income. So you will have to file your balance sheet. You will have to file some statement of profit and loss and all of that. If you're a company, and if you're an individual, or if you're a proprietor, you still have to file your individual balance sheet, and you'll have to upload it while you're filing your returns. And that way, uh, all the people, wherever there was a little bit of leakage, will get absorbed. I think this will have a certain amount of impact. Maybe it will add another 10, 20 lakh, assessees for the government's, pool of assessees. So we're about 6 crores, 5 crores 87 as per March 18 data. Maybe we'll add another 10, 15, 20 lakhs, who knows. We'll have to see the next year's records, the records actually which get published after March 21, because this will get enforced going forward, which means financial year 2021 is where this thing will come into action, and then the data will be published sometime in 22. So it'll take some time before we actually see the impact of this. But logically, and as a matter of fact, you can always assume that there is going to be a 10, 15, 20 lakh addition, because so many people will suddenly get captured. Because it's the same thing for properties also, right? That's how they used to capture that the buyer and the seller, you deduct a TDS, which means both the parties are included. They are already in the tax net, and the government is already, and the income tax department is already on a surveillance to understand what sort of a transaction happened. So they're trying to catch your transaction, and from the transaction, they'll go to your income, and then it's a good thing to comply, isn't it?
So I hope that answers the question, and it's very well put. We have a lot of questions, Kartik. So let me take up the questions which
Okay.
are repeated by a lot of people. So we
Okay.
have a question by Niti. The question is that was a point number 4 on the DDT bit, which said that if you earn dividend more than 10 lakhs, you could opt for the old regime of taxation. Isn't dividend taxable irrespective? So what does that point actually mean? Can you elaborate?
Uh, okay. So again, this was given to okay. So you can go with the old tax regime. So what it basically says is that if you had there's a lot of dividend income up to 10 lakhs and above, okay, then they are giving you this facility. Again, the soft impact. They're giving you the facility that you do it like the way it was last time. So you can take that deduction or that exemption up to 10 lakhs of dividend. Beyond that, whatever dividend you earn, this was again put somewhere into a very, very tiny fine print that you can go to the old tax regime, because they're giving you that facility on the income tax. So on the dividends also you can pay, because there's a reduced tax there. You pay about, if I'm right, I think you pay about 10% tax on the money that on the dividend that you earn, which is above 10 lakhs. So if you don't want to add the whole dividend to your income, and this will also automatically apply with the new tax regime. So if you're in the new tax regime, then this doesn't apply. But if you're in the old tax regime, then for your dividend income also you will go on the old tax regime, and you will get that advantage. And that's basically what it means.
So, Kartik, one common question.
Also, one more thing. Also,
Yeah.
I would suggest, please talk to chartered accountants. And you see, people are still deciphering it, and deeply buried inside the finance bill. Sometimes you find these tiny, tiny provisions. I try to catch as much as I could. But if you actually have a client case like this, I would suggest take a counsel from a person who's actually filing his returns also. Sorry, yes, Priya, continue.
Yeah, I think that would be important to just actually go to the chartered accountant and get a clear view before actually taking any decision. So this is a common question, Kartik. I don't know if you have the answer to it or not. So the question
Right.
is, are individual taxpayers allowed to select every year that which tax slab out of the two they can choose, or they have to choose one and stick to it for every year? Do you have any clarity or idea on this?
Yes, 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 absolutely. And the clarity is that yes, you can choose. Basically, this is my assumption. This is my reading between the lines. I think this is like जोर का झटका धीरे से लगा है आपको. Okay, so so basically, what's happening is you can flip, but think about it this way: what a menace it will be if you keep flipping like this all the time, right? So you can flip for now, but I think in 2 or 3 years time the government will say, well, there is only one structure now, and that structure is already defunct, and we are not going to give you the facility to claim exemptions and deductions. Because look at the body language: if the income tax code had to be reduced, if it had to become a thinner book, then those exemptions have to get out. So that is already a direct way of telling you that look, I'm giving you a soft impact right now. Get ready, 2-3 years down the line, and these exemptions are already going. Now, wait a minute. Here, there is a little caveat also for business income earners. Uh, it's unfortunate, but for business income, for most of us, obviously, we are all business income earners. The moment you choose, the moment you opt for one method of tax regime, you can't flip that. It's the same thing like what used to happen in service tax. It's the same thing that used to happen in GST. That once, even if you're, let's say for GST, even if you're not under 20 lakhs or if your turnover is below 20 lakhs even today, but you insist on having a GST number, and if you want to collect GST and pay GST, then you can't sort of in next year revert back and say, oh, so this year also my turnover is below 20, so I will not pay GST, or I will not charge, and I will not collect, and I will not pay. You can't do that. So once you are into this, then you are into this, and that's because from a business income, it's quite variable. From a salaried point of view, the incremental difference would be just enough, and it will be also predictable. So yes, you can flip. The answer is that. Yeah, also understand in a few years time this will go away, and if you are in business, then you have to take one decision right now. And even if your clients are into business, self-employed professionals, business owners, SME, small enterprise owners, then for all of them the choice to be exercised is just once, and once you take a choice you'll have to stick by that.
Thank you so much. I think that answers the question. So we have a question on TDS. So the just a quick query. So the TDS on remittance of more than 7 lakhs, is this the yearly limit? Is the question.
Yeah, absolutely. Because the liberalized remittance scheme obviously talks about $250,000. So yes, obviously, essentially, I think they've tried to cap it at $10,000. So if you're going to do anything more than $10,000, then there will be a tax that will get attracted on such a thing. So and this would largely not apply to people like us who are either, who are traveling or who are just going for a little holiday and things like that, because you don't really take so much of money. Businesses will get affected a little bit in terms of cash flows, but then it's a tax that they are paying, right? They'll get an offset in the tax that they are in their income tax or corporation tax that they'll pay. So business travelers have this allowance of $3,000 versus individual travelers have a much smaller amount. From that point of view, if you are going to actually travel so much and spend beyond 7 lakhs of foreign exchange, then I think they're charging you something. But if students are going abroad to study, and if you are making investments, and if you're making large purchases, and then if you're collecting something, there's money. ADs are authorized dealers. If they're helping you, then yes, there'll be this thing, and it's on a yearly basis.
So I'll take up one last question. So this is by Senthil. So there are a lot of questions, as I said. Forgive me for if I'm not able to take up all the questions. Question:
Sure.
The TDS reduced to 2% for technical services. Does it include consulting services provided by the tax experts, or do you have any view on this?
See, frankly, a little bit of a gray area, but certain places very clear. Now, professionals, according to the income tax department, are people like chartered accountants, lawyers, and doctors are professionals. Some of financial advisors are not professionals. Okay, so this is how the income tax department thinks about this. Okay, and which means there are anybody and everybody who's even, let's say, a structural engineer, somebody who's providing technical services like a computer application person, somebody who's designing your website, for example, an absolute. So sometimes logic is a little convoluted here, and the department goes exactly on the words and the absolute meaning of it versus expanding the perspective of that word. So the examples also that they have quoted is computer operators and website designers. These are guys providing you technical services because something to do with technologies or technical, and therefore their TDS is a little lesser. Nothing to harm us. We had to spend the same amount of money as a business, or you have to spend the same amount of money. Just that you were deducting 10% to TDS earlier. Now you'll deduct 2%. So it's a little happy time for that person who's receiving that, because tax that will be deducted will be 2%. But whether it's 2% or 5% or 10%, effectively it's all going into that person's ES26, and that person has to file returns and has to comply with everything else. From a cash flow point of view, it makes zero impact on a business owner or for anybody running a business. So zero impact on us. A little positive impact on somebody who's actually giving these kind of technical services. He will have more cash in hand, and that way some cash flow more in hand is always a better thing to have. But be very cautious. If you are deducting, please don't deduct at 2%. please check with 5 people, look at his profession. If he has, a simple rule of thumb is, now if you have to engage services of anybody, my simple rule of thumb is, if that person has a postgraduate or a graduate qualification, postgraduate largely, or a technical qualification, engineering, it could be interior designing, it could be, then deduct 10%, because at least it's safer to deduct 10 if the person doesn't have an issue, and otherwise let the person get a clarification on his own chartered accountant that you can deduct 2% for him. But otherwise, postgraduate qualified educationally qualified people deduct 10%, and other people you can consider deducting 2% if you're going to engage their services.
I think that with that I would like to close the session. Thank you so much, Kartik. I think, like I said before,
Okay.
decoding is not simple, and you've taken it to a great level with this. We have a lot of people saying, superb session. Thank you for the clarification. Indeed, a great work decoding the budget.